Welcome to the future of finance, where quantum computing is set to transform stock trading by 2030. In this video, we'll explore how this revolutionary technology could redefine portfolio optimization and high-frequency trading. From companies like Rigetti Computing pushing the boundaries of quantum hardware to the potential for massive market shifts, we've got a lot to cover. Let's dive into the quantum leap and see what's coming by 2030. First, let's break down what quantum computing is and why it matters for stock trading. Traditional computers use bits, which represent either a 0 or a 1. Quantum computers, on the other hand, use quantum bits or qubits, which can represent both 0 and 1 at the same time. This property, called superposition, allows quantum computers to process vast amounts of data simultaneously. Another key feature is entanglement, where qubits become interconnected, enabling faster and more complex calculations. These capabilities make quantum computers ideal for solving problems that are too complex for classical computers. In stock trading, this means optimizing portfolios and executing trades at unprecedented speeds. By 2030, quantum computing could be a game-changer for the financial industry. To understand this impact, let's look at the current state of quantum computing. Companies like Rigetti Computing are at the forefront of developing quantum hardware. Rigetti, based in Berkeley, California, specializes in superconducting quantum processors. Their approach involves building full-stack quantum systems, from chip design to cloud-based quantum computing services. In 2024, Rigetti launched the Novera QPU, a 9-qubit quantum processing unit priced at around $900,000. This was their first commercially available quantum computer, a major milestone. They also introduced the 84-qubit Ankaa-3 system, achieving a 99.5% median 2-qubit gate fidelity. This level of fidelity means their systems are becoming more reliable for practical applications. Rigetti's roadmap includes a 36-qubit system by mid-2025. By 2026, they aim to deploy a 1,000-qubit system, and by the early 2030s, a 1 million qubit system. These advancements are critical for scaling quantum computers to handle real-world financial tasks. Rigetti isn't alone in this race. Companies like IBM, Google, and IonQ are also developing quantum systems with unique approaches. For example, Google's Willow quantum chip, announced in December 2024, made headlines for its error correction capabilities. IBM is focusing on scalable quantum systems, while IonQ uses trapped ion technology. Each company is tackling the challenge of building stable, error-corrected quantum computers. But Rigetti's focus on superconducting qubits and modular architecture gives it a competitive edge. Their systems are designed for fast gate operations, crucial for high-frequency trading. Now, let's talk about how quantum computing could transform stock trading. Stock trading relies on analyzing massive datasets to make split-second decisions. Portfolio optimization, for instance, involves balancing risk and reward across thousands of assets. Classical computers struggle with the complexity of these calculations, especially as portfolios grow. Quantum computers, with their ability to process multiple scenarios at once, could solve these problems much faster. This could lead to more efficient portfolios with higher returns and lower risk. High-frequency trading, or HFTs, is another area where quantum computing could shine. HFT involves executing thousands of trades per second, often using complex algorithms. Quantum computers could analyze market data and execute trades faster than any classical system. This speed advantage could give traders a significant edge in volatile markets. By 2030, quantum-powered HFTs could dominate the stock market. Let's explore portfolio optimization in more detail. Portfolio optimization is about finding the best combination of assets to maximize returns. This involves analyzing correlations, volatilities, and expected returns for thousands of stocks. The problem grows exponentially as more assets are added, making it computationally intensive. Classical computers often rely on approximations, which can lead to suboptimal portfolios. Quantum computers can tackle these problems directly, using algorithms like the quantum approximate optimization algorithm. This algorithm leverages quantum superposition to evaluate multiple portfolio combinations at once. The result is a more accurate and efficient optimization process. Rigetti's quantum preconditioning algorithm, introduced in 2024, is a step toward this goal. It's designed to solve optimization problems faster than classical methods. By 2030, such algorithms could be standard in portfolio management. Now, let's turn to high-frequency trading. HFT firms rely on speed to exploit tiny price differences in the market. Even a millisecond advantage can translate to millions in profits. Quantum computers could take this to the next level. Their ability to process data in parallel could reduce latency to nanoseconds. Rigetti's systems with gate speeds of 60 to 80 nanoseconds are already showing promise. By 2030, quantum-powered HFT could execute trades faster than any human or classical system. This could reshape the competitive landscape of trading firms. But it's not just about speed. Quantum computing could also enhance predictive models. Machine learning models used in trading rely on analyzing historical data to predict price movements. Quantum machine learning could process larger datasets and find patterns that classical models miss. This could lead to more accurate predictions and better trading strategies. Rigetti's partnership with quantum machines to automate quantum computer calibration using AI is a step in this direction. By 2030, quantum-enhanced AI could be a standard tool for traders. So what does this mean for the stock market as a whole? Quantum computing could democratize access to advanced trading strategies. Smaller firms could compete with Wall Street giants by using cloud-based quantum computing services. Rigetti's Quantum Cloud Services platform, for example, offers access to their quantum processors. This could level the playing field and increase market efficiency. However, there are challenges to overcome before quantum computing transforms trading. One major hurdle is error correction. Qubits are sensitive to environmental noise, which can cause computational errors. Rigetti's partnership with Revolutionize is addressing this through advanced error correction techniques. By 2030, we expect significant progress in building fault-tolerant quantum computers. Another challenge is cost. Quantum computers are expensive to build and maintain, requiring ultra-low temperatures. Rigetti's Nvidia QPU costs $900,000, but cloud access makes it more affordable. By 2030, economies of scale could drive down costs, making quantum computing accessible to more firms. Regulation is another factor. Quantum computing could disrupt markets, raising concerns about fairness and stability. Regulators may impose rules to ensure quantum-powered trading doesn't destabilize markets. By 2030, we'll likely see frameworks to govern quantum trading. Despite these challenges, the potential rewards are enormous. The global quantum computing market is projected to reach $5.3 billion by 2029. Some estimates suggest it could grow to $15 to $30 billion by 2030. Financial services, including stock trading, will be a major driver of this growth. Rigetti's partnerships with major players like Quanta Computer are accelerating this trend. In 2025, Rigetti and Quanta announced a collaboration to advance superconducting quantum computing. Both companies are investing over $100 million over 5 years. This partnership could lead to breakthroughs in quantum hardware by 2030. Rigetti's selection for DARPA Quantum Benchmarking Initiative is another positive sign. The program aims to verify if quantum computers can achieve utility-scale operation by 2033. Rigetti's involvement shows confidence in their technology. So, how will quantum computing change the stock trading landscape by 2030? First, we'll see faster and more accurate portfolio optimization. Investors could achieve higher returns with less risk. Second, high-frequency trading will become even faster. Quantum-powered HFT firms could dominate the market. Third, quantum machine learning could revolutionize trading strategies. More accurate predictions could lead to bigger profits. Finally, cloud-based quantum computing could make these tools accessible to smaller firms. This could create a more competitive and dynamic market. But there are risks to consider. Quantum computing could exacerbate market volatility. Ultra-fast trading could trigger flash crashes if not properly regulated. There's also the risk of a quantum divide, where only wealthy firms can afford the technology. This could widen inequality in the financial sector. To mitigate these risks, collaboration between industry regulators and researchers is essential. By 2030, we expect a balanced approach to quantum trading. Let's look at Rigetti's role in this transformation. Rigetti's full-stack approach makes it a leader in quantum computing. They design their own chips, build quantum systems, and provide cloud access. Their clients include NASA, the US Air Force, and HSBC, showing their credibility. Rigetti's stock has surged over 1,700% in the past year. This reflects investor excitement about quantum computing's potential. However, their revenue remains modest at $10.8 million in 2024. They're burning cash with losses of $200 million last year. This makes Rigetti a high-risk, high-reward investment. By 2030, their success will depend on scaling their technology and achieving profitability. Other quantum companies, like D-Wave and IonQ, are also worth watching. D-Wave focuses on quantum annealing, which is suited for optimization problems. IonQ's trapped ion systems are known for their stability. Each company could play a role in transforming stock trading. So, what should investors and traders do to prepare for 2030? First, stay informed about quantum computing advancements. Follow companies like Rigetti, IBM, and Google for updates. Second, consider investing in quantum computing stocks or ETFs. The QTUM ETF, for example, includes Rigetti, IonQ, and other tech firms. Third, experiment with quantum computing tools. Rigetti's Quantum Cloud Services offers access to their systems for developers. Finally, advocate for responsible regulation. Engage with policymakers to ensure quantum trading benefits everyone. As we approach 2030, quantum computing will redefine stock trading. From portfolio optimization to high-frequency trading, the possibilities are endless. Companies like Rigetti are leading the charge, but challenges remain. By staying informed and proactive, you can be part of this quantum leap forward. Thanks for watching, and don't forget to like and subscribe for more insights. See you in the future of finance.